Hey all, welcome to Shatrak. This is Raj here. Friends, I don't have anything great for you today. It's as a creator of videos, I find that I'm uniquely at a loss of ideas at this point of time. I'm looking at the market and I don't see anything specific that I can talk about. I do speculate what's going to happen in the future, but right now my portfolios are looking much better. There's a lot of greenery. And in the last couple of days, I sold some covered calls on DNA and on CRISPR, and both of them are looking good. And I also sold covered calls on Bluebird. So those are looking good. But my investment in Allogene is doing really bad. It's down 62% or something like that. So it's not looking great. So this video today is just going to be a stream of consciousness. I don't think I'm going to be talking for too long. I just wanted to share some thoughts with you because once I decided to become a content creator, I stopped watching TV news and also financial segments to keep my thoughts original. And today, what I did was I took a look at what's happening in CNBC. I saw their programs for the day, and it was very interesting, the diverse opinions that are out there. Some people call it a Goldilocks situation in which we will remain until interest rate starts to come down. And there were a few concepts that were thrown around, but I'm going to share with you my personal opinion today on what I think is happening and what is likely to happen. I'd like to get your feedback because you're also participating in the market. I'd like to get your vantage point of view, what you think is happening. So with that said, let's get started. Welcome back, friends. So I'm looking at the markets right now, and I think there are mixed messages coming in. Out here in Canada, for example, the Bank of Canada has increased the interest rate by 25 basis points. And there is immense pressure on the housing sector because we in Canada have mortgage renewals happening in 3-year and 5-year terms. So there will be many people who initially had interest rate of 1.75 or something like that coming up for renewal. Whether they will qualify and how they will do it is anybody's question. Plus our government has allowed heavy immigration. We are taking a record number of immigrants, and it's being done to ease the labor situation. But at the same time, whenever the immigrants come in, they bring money with them, and all that money is earmarked to be spent within the first 3 months, by which time they expect to get a job and start sustaining themselves with salaries earned in Canada. So it's going to take them a lead time of 3 months to get productive and fill up the labor gap. But in the meantime, they are already spending money, and they are spending it on rent. There is heavy competition for accommodation, and there's a shortage of accommodation. Then they are spending it on food. So food inflation is also quite high. I don't see how increasing interest rates by the central bank is going to make any dent on those two. So with that said, what's going to happen in future? I really don't know. I may expect some foreclosures to happen down the line. And a good portion of Canada's GDP is on the housing sector, not just the houses that people live in, but also things related to it like carpentry, plumbing, home renovation, renovation supplies, and all those kind of things, building material and all that. They're all linked together and they form a good portion of the GDP. So we are likely to slip into a recession. That's what I'm thinking. And when I look at the US markets, what I feel is that the tech stocks that we have been looking at, they have been doing extremely well. So they are, I'm really surprised at the strength of the tech stocks. I'll give you an example of FNGU, which is the 3x leveraged FANG stocks fund from BMO. I have that in my portfolio and I bought it somewhere around $85 or something. Right now it's showing a gain of around, I think, 130% or something like that. So it's really, really strong. So it shows big jump. And along with that, you can say that Apple, Microsoft, those are all the companies which are at the top. And I think Meta is going to add more strength because of Threads picking up and taking over progressively from Twitter. So Meta is also going to be part of, is also a part of the FNGU. So it's going to push it for upward while Apple and Microsoft start slowing down. And even if you look at Apple's trajectory, the bull channel is very moderately sloped. So it's not going to be very difficult to sustain. Now, the question is what happens to the other parts of the market. So we have seen a good deal of rally in genomic stocks, which I was very surprised with because that means people are willing to take risk. So what is the difference? So one way of looking at it would be that the American market has already priced in the fact that there's going to be at least one more interest rate hike later this month. And they are expecting that the inflation is under control based on the recent statistics that we have received, that the inflation has peaked, and towards the end of the year there may be rate cuts. And in anticipation of that, people are starting to buy up bargain stocks. So this sentiment from now onwards until the actual rate cut happens, if it happens at the end of the year, is a period I believe which is going to be a bit volatile. So at this point of time, I'm sitting happy on the covered calls that I sold because the covered calls are in positive right now. So I stand to gain. So I don't have to do anything. So I'm less stressed out now than I was before. But we should expect that there'll be some profit taking happening, and there could be some steep falls and then a gradual climb back again all the way from now towards the end of the year. And if at the end of the year rate cuts do not materialize, expect a huge fall back again because that's the expectation I think the market has got right now. So any other news that comes in, any news from the Fed or any geopolitical stimulus, either from the war in Russia and Ukraine, those kind of things can have some impact. Even oil price is down. So if oil price is already down I think inflation has to give way. So I'm hopeful that inflation will fall and things will get back to normal. In any case, I think if one were to manage, I'm looking at both American context and Canadian context. From the Canadian context, I think that if one is invested in real estate, which is rental properties as well as maybe Airbnb, those kind of things, if you're just able to hang on for the next 2 years, I think everything is going to be superlative as far as Canada is concerned, because the record immigration is ultimately going to lead to people getting jobs and working, and therefore the labor market will become easy, and then the inflation needs to come down. So that's the expectation. And when that happens, the interest rates will be cut and these real estate prices will go up, because we are frankly not building enough homes for all the people that we have got into the country. So housing situation is very, very tight and it's very expensive. So there's going to be more supply coming in, but not fast enough. So for the foreseeable future, or at least for the next 5 or 6 years, I see steady growth in real estate prices. And I think the Toronto market will be able to weather the next 2 years effectively. And when you come to the US markets, I think US has got a different dynamic with longer term mortgages. So the rate sensitiveness of the real estate market, I don't think is that high as we can find in Canada. And I think in the next 6 to 8 months, US investors should also feel a lot of relief. US will feel relief much faster than the Canadians. That's my opinion, and that's my video segment for today, friends. Please put your thoughts in the comments below so that I can get an idea of where you're coming from. With that said, I'd like to end this video here. Bye for now.